Hello everybody. So this is kind of a catch-all video for some of the quarterly earnings Q2s that are to be announced in the coming 3 days, and I'm especially paying attention to HIMS and Nebius. These are positions of mine. HIMS is particularly big, and I consider that the earnings coming up will create movements, market movements. And so how am I playing it? I also want to talk about CoreWeave a little bit. Let's get started. So two big stocks that I own report on Monday and on Wednesday after market close. So you can see HIMS trading at 31, Nebius trading at 187. Nebius came way back down when CoreWeave didn't, and that means that kind of a discount we see in Nebius right now, we owe to Michael Burry shorting Nebius specifically, and not necessarily shorting the other names in the Neocloud sector. And so Nebius, in my view, is already trading at a discount relative to the other Neoclouds. HIMS, of course, fell with the general market when growth was sold off. We hit the bottom on that infamous Wednesday with a pretty bad speech, and everybody was so negative. And then the liquidation, of course, of Aschenbrenner by Citadel, it spooked the market. Then we bounced back for HIMS. The point I'm trying to make by looking at all three of these charts is that there is insane volatility for these stocks. So if you use the 30-day volatility, right, a lot of options are priced with that. If you use that, you can see HIMS we're at 94%, CoreWeave at 100%, Nebius we're at a mind-boggling 130% volatility. These volatility numbers are much higher than even risky cryptos, quote unquote, right? It's like compare the volatility of Nebius to, say, a Solana. You'll see Nebius is much more volatile. Compare the volatility of Nebius compared to Bitcoin, you'll see Bitcoin is totally not volatile. Volatility has moved away from what used to be seen as, you know, the Wild West crypto, and it's that volatility has moved into stocks where people greatly disagree on, right? A lot of people think AI is hype. A lot of people think HIMS is not going to make it because they're trying to disrupt a legacy sector that has been operating the same way for well over 100 years. And traditional people don't like that, and they take a lot of bets against these new companies who have these new approaches of doing things. So now let me get it briefly into the meat of the video. So first of all, what am I going to do? Well, such high volatility numbers imply huge moves after earnings. And actually, if you look at options, it's not uncommon to imply that the moves for this stock is going to be, 15 to 30%. That's quite a big range, but I think 15 to 20% could be the moves to be expected on these stocks, especially as you look at the bets that people are making. So what is my strategy for these three stocks and for volatile stocks in general? Strategy is clear. No adding positions before the market has become a bit of a casino, a bit of a gambler's paradise right now. And so to me, I don't want to take any positions before, don't want to be on the wrong side of a trade. I will be looking at many stocks that I like, many stocks that are high growth. Nebius and HIMS are two of those. And if the market, gets annoyed by a little item for some reason, or if a narrative sticks, we will see a 20% drawdown, and that's when I will consider potentially getting in. I feel much safer doing that than taking a position before, because here's the thing: you could have absolutely outstanding earnings for either HIMS or Nebius, and the market could still sell them off. This is my case in point with Google 3 weeks ago or 2 weeks ago. Absolutely outstanding earnings, the market sold it off anyways. And so that's just the way it works. We can't really, to me, the correlation between earnings quality and actually earnings move, to me, that correlation has been going down and down and down, and that's been the case for many, many months now. So what are my expectations for HIMS? Over the long term, I expect only good things for HIMS. Over the long term, I am more excited than ever. When I look at the call, what do I expect in the call? I want to hear more about wearables. We know they launched a scale that's going to be very popular among their GLP-1 offerings to track weights, etc. I want to hear more on labs. I want to hear the actual growth numbers of GLP-1s. Right? What's the share of GLP-1 for compared to the total revenue of HIMS? Is it as high as the GLP-1 bulls say. I want to see that comparison. I want to see those numbers. And we know Yemi often throws hints as to how many subscribers, or at least how many subscribers are in each category, and he calls it the weight loss category. You still have the metformin-based pills in there. But, some insight as to how big is GLP-1s for HIMS, actually. More insights about the peptide launch. When is that going to be a thing? Is that going to be early January of 2027? I think at this point it's fair to expect it to happen in 2027 early, but maybe having a timeline on that. And to me, the biggest deal that I expect on the call is the discussion of eucalyptus, how is the integration going, and of course, how that's going to impact the long-term outlook. I believe HIMS is overdue for a long-term outlook update, and so I can't wait for that update. I think that update could bode very well for HIMS and, highlight a lot of good things coming up. But here's the thing. Who knows what the market will pick on? Who knows what the market will be annoyed by? The old FUD for HIMS can always make a comeback, and you'll always have accounts pushing the old FUD, right? So we have the FTC suit. To me, I've said it before, they had provisioned something like $30 million for it back in the day when they were trying to settle. To me, if it's going to court, the final outcome will be in the 2030s, in the early 2030s. That's the speed of law for you, and maybe it will be a $50 million fine then, maybe it will be a $100 million fine. I think it's a nothing burger. Old FUD could come back, though, on other things, like, for example, marketing spend. That could be an old FUD that comes back. And a FUD that we saw last quarter was kind of an ED slowdown. And so you may remember Yemi talking about how they're trying to move into the quality segment of ED. So they want to do their hard mints by HIMS, and they want to do the more expensive segment of ED. So that could be another FUD coming up saying, oh, HIMS is just an ED company and nothing else. That could be another FUD. I'm curious about that. The mix, right? The product mix is what I'm curious about. Also, testosterone. How is testosterone doing? Also, HERS. How is HERS growing? Is HERS growing as fast as before? How's anxiety doing? There's a lot of things to look at this stock, and the revenue mix, I think, is going to be interesting. Because to me, this is not just a GLP-1 company. This is not just a peptide company, right? That will be the next narrative. This is not just an ED company. To me, this is an holistic, small to medium health problem company. An holistic company that includes the doctor visits, that includes the pharmacy, that includes the AI making the drugs eventually, and all of this for cheaper than copays because they don't take insurance, and so they have a very inexpensive approach to the marketplace. And all of this with transparency. I've made so many videos on HIMS. To me, HIMS is the future. To me, much of our health problems in the future will be handled by a big tech company, and my bet is that big tech company that will handle most of our health problems, the minor ones, the medium ones, that big tech company, my bet will be a company like HIMS. Hopefully HIMS. I think Amazon has the wrong strategy trying to go with insurance, because Amazon moves slow if they go with insurance. I think also LifeMD. You may remember my video on LifeMD. Same thing. I think LifeMD, yeah, they take insurance, but I think the drawback of that is that you're going to move too slow, because you have to wait 6 weeks to get your money back, and you can't tell your customer exactly how much it's going to cost. And your insurance dictates how you get treated, not the provider who actually believes you need something. So anyways, HIMS to me has a lot of potential. Enough about HIMS. This is more of a video about different topics. So let's not just talk about HIMS. Let's talk about Nebius. So, Nebius, I think the reason why Nebius is down, and you may remember on Friday, it traded down to like 182 or something. It's down because of Michael Burry. Michael Burry is a loud investor, and he's taking a short, and he's been very loud about the short position. At least social media has been very loud about the fact that Michael Burry, the successful guy from the Big Short, decided to go against Nebius. He also went against Oracle. Generally bearish guy on AI, and that's not me at all. Of course, I'm extremely bullish on AI. I think AI is the future. I think the demand for intelligence is insatiable, especially as these models start remembering everything you've told them, especially as these models become agents and start doing things for you and start logging into different websites for you and running ads for you and running campaigns, right? We saw that with Zeta, for example. As soon as these models try to act on you, to me, AI is absolutely not a bubble. But to some people it is, because it reminds them of the optics fiber era of the 2000s, where they overlaid optics fiber. It reminds them of Cisco, where Cisco waited nearly 2 decades to get back to the level it was. Anyways, I don't see that with Nebius. When I look at Nebius, I see a company that has 51 billion, I say I here, 51 billion worth of upcoming pipelines, upcoming contracts. So, and that's in the next 5 years. And for the next 5 years, that's for their longest contract, by the way. So that's for the next 5 years, 51 billion. They're still signing contracts, by the way. And so what that means is that the entire entire revenue coming up over the next 5 years is bigger than the current enterprise value. Bigger than the current return. If they have more money coming in deals, in signed deals, than the current enterprise value of the company. So if you were to create a price to forward cumulative sales of the next 5 years, right, we'd be at a 1. Less than a 1, actually. And I saw this rumor, this tweet got quite a few views on X. X is really where I guess a lot of the rumors spread. Whether it's true or not, I have no idea. But it's true that Nebius is overdue for a contract. We've been waiting for them to announce a contract. They're overdue for a contract. This guy's saying 33 billion potentially in Missouri, perhaps with Google. So that's a rumor that we need to be aware of. I think Nebius too is overdue to announce something big. I don't really know when it's going to be, who it's going to be. Should they announce it during the earnings, or should they make a separate announcement? And maybe when the shorts are at an all-time high, maybe when there's a lot of short float, they get this data, they can see this data. Maybe that's when you announce that you have a good contract coming up. But they are due for a contract. Another thing that I like about Nebius, of course, I've said this before many times, is their stake in ClickHouse. Go onto the VC websites, ask AI about the value of ClickHouse. They own 26%. It was 28, and there was another round, so now I think it dropped to 26. They own 26% of ClickHouse. Reported valuation in January of 2026 was 15 billion. It's higher now. ClickHouse could be as big as Snowflake. And so if that is the case, then what value do you put to owning more than a quarter of it? Well, 20 billion, 25 billion, something like that, if ClickHouse is ever the size of Snowflake. So again, that's to be removed from the enterprise value here, and it's not reflected. Of course, AV-Ride has also been somewhat in the news recently, and so if they sell AV-Ride, that could also be quite a big deal. They have an investment from Uber. AV-Ride may be their second most valuable VC investment. The reason why this company has VC investments, of course, is because the CEO was the former CEO of Yandex. Yandex was the Google of Russia, probably still is, but the CEO decided to go his own separate way and build a new company, Nebius. And so you get that elite management team who was part of a former big tech company with Nebius. This is why I like Nebius more than the other Neoclouds, more than most of them. And the only thing I used to, the reason why I haven't covered Nebius as much the past few months is because it was trading in the stratosphere, like 250, 270. It was trading too high. When I see Nebius come down, it pleases me. I'm happy to see Nebius at 187. I find that much more reasonable. The EV over GP over RG is a 0.17. I find that much more reasonable. My revenue growth number here, I have it at 600%. Analysts are actually saying 400%. And my eyes are telling me, more like 1,000%. If I were to look at the ARR of $9 billion, maybe by the end of 2026, my eyes are telling me this should be 1,000%. So your guess is as good as mine as to what the revenue growth is going to be. What's sure is that it could be a 5-bagger, it could be a 10-bagger, But in my view, it's going to be way more than 100%. Way more than 100%. Therefore, it's growing faster than CoreWeave. And that's why I like Nebius. That's why I own Nebius. I do not own CoreWeave, but I do look at CoreWeave. CoreWeave is the original Neocloud. CoreWeave is a little more expensive, 0.21. But when I look at the chart of CoreWeave, I see a soothing stability. It's been a little stable. If you look, I mean, it's crazy to say that, but it's been a little stable if you compare it to a stock like Nebius. And of course, why is that, right? It's a much bigger company. $82 billion for CoreWeave. Think about that. I remember the day when $100 billion for a company was a lot of money. I remember that. This is a very big company. Nebius has a huge backlog, $99 billion worth of backlog. Much of it to be recognized in the next 24 months. CoreWeave, I didn't mean Nebius. CoreWeave. So CoreWeave has a lot of stuff going for it, a lot of contracts. Maybe the market is getting a little spooked because of their OpenAI agreement, and there's a lot of people who criticize OpenAI right now. Maybe that's the reason, but to me, CoreWeave is a fair candidate for addition if we were to see the stock down 30% because the market decides to pick on whatever they say in their earnings, because the market decides to be spooked. I know a lot of people dislike CoreWeave because of the debt. And again, there's a lot of quote-unquote FUD pieces about the debt. And, if you actually look at the value of tokens, the value of tokens, the value of price, one pays per token, has not only been stable, but depending on the sources, it's actually been going up. Like companies are willing to pay more for tokens. So again, I'm not so sure. Same, right? With Nebius, we had the same change in how they depreciate GPUs. They move from a 4-year schedule to a 5-year schedule, which means the GPUs have a longer useful life than initially thought. So this sector is very much a hot sector, I would say. And I would say it's a real sector of AI, and we're going to need these neoclouds if we all spend hours a day talking to models. And we're going to need them even more if those models operate cars at one point, and operate robots, and operate all sorts of different things, and operate companies, right? The models are going to operate and run the companies at one point. And so I think the demand for compute is very much insatiable. And I'll conclude with that. So you may know one of the biggest ETFs out there has been, not biggest, but success story. One of the better success stories out there as far as an ETF goes has been the DRAM ETF. The DRAM ETF was launched, was it last year or something like that? And it's experienced unprecedented growth. Well, the company who had the DRAM ETF just launched a Neocloud ETF, clearly showing that they see Neoclouds perhaps as making a move similar to a lot of memory names. And if you look at the Neocloud ETF, you can see CoreWeave is in the number 1, Nebius is number 2, and then we have IREN, but IREN, of course, is a former Bitcoin miner, and it is not as straightforward and as easy to analyze. And then we have a bunch of former Bitcoin miners in there, but CoreWeave and Nebius seem to be the two pure play Neoclouds. They could be the standalone companies of GPU clouds, and that could be a big sector. And yes, they develop themselves a little differently, right? It's not like the hyperscalers, not like GCP within a Google, and it's not like Amazon Web Services within an Amazon. They are standalone providers of compute. And servicing, of course, the big tech companies, but also servicing all sorts of smaller companies. And you may have seen with the AI, all of the smaller contracts that they have. They have smaller contracts, like Nebius, for example, as a contract with Jane Street as an example. Not Nebius, CoreWeave. So anyways, it's very blurry to analyze these stocks right now. There's a lot of opinions out there. I always go back to my spreadsheet. When I look at my little spreadsheet here, I see them at 0.17, right? It's too cheap. Same for HIMS. HIMS has always been cheap. HIMS continues to be cheap. That's not true of all stocks, right? You still have stocks. You still have software stocks right now who still look very expensive on this spreadsheet. So it's not true of all stocks. I find the sector pretty cheap. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you're entertained. Please like, please subscribe. Follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.